I want to say, up front, that I take full responsibility for this decision.
It's been a turbulent few months for Meta, the world's largest tech conglomerate.
Facebook founder Mark Zuckerberg is laying off 11,000 workers.
Recently, they reported a record-breaking loss of $230 billion, the biggest corporate loss in history.
Facebook's New York City headquarters fired workers are expressing heartbreak.
This staggering figure has caused shockwaves throughout the business and financial world, as people try to understand how one of the most successful companies could lose this much money. With many questions unanswered, now is the perfect time to explore why Meta lost such an astronomical amount of money. Meta, once the most profitable tech company in the world, experienced an unprecedented fall from grace in 2021 due to a devastating financial loss. The company lost over $230 billion, quickly becoming the largest single company loss in history and catapulting the company into global headlines.
Much of the problem is Zuckerberg's $100 billion investment in the metaverse.
Meta was once one of the world's most powerful corporations. But it wasn't always like this. Their success story began long before the fateful day that undid all of their hard work.
Well, the Facebook that exists today is not the Facebook that we founded in 2004.
Meta, founded in 2004 by entrepreneur Mark Zuckerberg, rose to prominence through strategic investments and acquisitions. During this time, they expanded rapidly, eventually becoming a Fortune 500 company and attracting investors from all over the world. Mark Zuckerberg's social media empire felt the full force of investors' concerns about its growth prospects on Thursday, as the revelation of Facebook's first-ever drop in daily users helped trigger a sell-off, with shares down by a quarter.
Oh my God, who wrote this? This was literally like my dream job.
Here are some key points to help explain the sell-off, which has wiped about $220 billion off Meta's market value. Facebook is Meta's biggest app, and it recorded its first fall in daily active users, a key growth metric, since the company was founded in 2004. Global daily users dropped in the third quarter of 2021. It was led by a decline in users in Africa and Latin America, which is worrying for Meta because it needs to grow outside of its main market in the US, where growth fell too, albeit not for the first time. Frances Hodgson, a whistleblower, released internal documents last year that included presentations warning that Facebook was losing young users. One document revealed that engagement is declining for teens in most Western and several non-Western countries. Zuckerberg, Meta's founder and chief executive, identified the video-sharing app TikTok as a key contributor to the user growth problem. People have a lot of options for how they want to spend their time, and the app is growing very quickly, he said during a conference call with investors on Wednesday. This app, which is owned by the Chinese government, has 1 billion users worldwide and is one of the reasons Meta is struggling to compete in the market for young consumers. On the call, Zuckerberg said, "This is why our long-term focus on Reels is so important, as is our work to ensure that our apps are the best services available for young adults. In the meantime," he admits, it means slower revenue growth. Meta makes 97% of its revenue from advertising, by building up profiles of its users that can then be matched to advertisers' needs. So if an advertiser is looking for a consumer in a certain location, of a specific demographic and with certain hobbies, then Meta can direct those ads towards particular groups thanks to the data it has compiled about them. Sheryl Sandberg, Meta's chief operating officer and architect of Facebook's advertising strategy, said during an investor call on Wednesday that the company had ways of targeting users with less data. There are also a lot of things that small businesses and large businesses can do to take advantage of the many targeting and measurement tools we have, she said. It should be pointed out that overall revenue did grow in the 3 months to December, up to $33.7 billion compared with $28.1 billion for the same period last year. Net income, a U.S. measure of profit, was $10.3 billion for the quarter, down nearly $1 billion on last year. Nonetheless, Meta remains a very wealthy and profitable business. A historic plunge in the stock price of Facebook's parent company has erased more than $230 billion in its market value, easily the biggest one-day loss in history for a U.S. company. The 26.4% wipeout in Meta comes amid concerns about the company's future after it reported its first-ever drop in daily user numbers in its earnings report on Wednesday. Last year, Facebook rebranded to Meta as part of its strategic shift toward becoming a virtual reality-based company. The company's advertising model has also been harmed by Apple's privacy changes, which Facebook estimates will cost them billions of dollars. The slump in stock price has sent Mark Zuckerberg's personal wealth tumbling by nearly $30 billion. According to a Reuters analysis of Refinitiv data, Meta's stock decline was the largest drop in market value for a U.S. public company. It was a disappointment for a company that investors have become accustomed to delivering spectacular growth. Meta also reported a rare decline in profit due to a sharp increase in expenses as it invests in the metaverse. Meta CEO Mark Zuckerberg may be keen to coax the world into an alternate reality, but disappointing fourth-quarter results were quick to burst his metaverse bubble, said Laura Hoy, an equity analyst at Hargreaves Lansdowne. On a Wednesday call with investors, Zuckerberg said he was proud of the work the company had done last year but acknowledged the company faced tough competition for attention from rivals including TikTok. The fall of Meta's stock helped yank other tech stocks lower on Wall Street on Thursday, abruptly ending a four-day winning streak for the market. The stocks of other social media companies, including Twitter, also fell. Spotify also slumped 16.8% after the leading music streaming service gave investors a weak forecast for a closely watched measure of its earnings. The company has come under fire after Neil Young removed his music from its platform in response to Spotify's star podcaster, Joe Rogan, spreading COVID misinformation. Big U.S. tech-focused companies have come under mounting pressure in 2022 as investors expect policy tightening at the U.S. Federal Reserve to erode the industry's rich valuations following years of ultra-low interest rates.
I don't have a job anymore.
I don't even know what to do with myself.
The Nasdaq, which is dominated by tech and other growth stocks, fell more than 9% in January, its worst monthly drop since the coronavirus-induced market crash in March 2020. The downgrade in the earnings outlook by Meta and other companies took markets by surprise, said Kenneth Brew, a strategist at Societe Generale in London. The tech sell-off spilled over to broader equity markets this morning, and with the Fed preparing to raise interest rates, we could see more volatility going forward, he said. With big tech firms like Apple and Microsoft ballooning in valuations in the past few years, they have also become more susceptible to investor whiplash, often resulting in losses worth tens of billions of dollars in a single day of trade.